Hey everyone, and welcome back to another cryptocurrency video. In today's video we will be discussing the most recent FOMC meeting and what the decision means for Bitcoin and the cryptocurrency asset class. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button as it means oh so much to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice discount off your next purchase. So without further ado, let's begin. And let's begin with the decision that the FOMC made. This hasn't quite updated yet because today is the 20th of March and the decision did come out just an hour ago. And the Fed decided to leave rates unchanged. Shocker, right? I know. The market makers predicted that it was 99% certain that the Fed was going to leave the rates unchanged with only a 1% chance of a rate cut. The next FOMC meeting, which is in exactly 41 days, 22 hours, 51 minutes and 6 seconds, the market makers also predict that the rates will remain unchanged yet again with a 96.8% chance of remaining the same come the 1st of May. So what does this decision of leaving the rates unchanged mean for the economy? And we will then discuss after what it means for Bitcoin and the cryptocurrency asset class. So with regards to the economy, why did the Fed make this decision? The reason why the Fed made the decision of leaving the rates unchanged is because of two other key metrics: the inflation rate and the unemployment rate. The inflation rate is currently at 3.2%, which is essentially classed as sticky. The target inflation rate is 2%, yet inflation has been ranging and flirting with 3% since June of 2023. So in just shy of a year, inflation has remained the same. It has not moved, even though the target is 2%, whilst the unemployment rate is still below 4%. So the Fed want inflation to drop. At the same time, they don't want the unemployment rate to shoot sky high. At the moment, you can see that the unemployment rate is currently in an uptrend, but inflation is stagnant. So they are leaving rates higher for longer in order to bring inflation down whilst they can, as the unemployment rate is still below 4%. Yeah? Do you understand? So that's that's the reason why the Fed has kept rates unchanged, which is understandable. Come the 1st of May, I mean, even though it's 96.8% certain, well, the market makers believe it is certain that the rates will remain unchanged, there's a lot of data that can knock this off board until we get to the 1st of May. The 1st of May is essentially 6 weeks away, and a lot can happen within 6 weeks. Now, this can change tomorrow. Let's say, for example, the next inflation rate comes in before this next FOMC meeting, and unemployment rate surprisingly jumps from 3.9% to 4.2% or 4.1%. Once it goes over that 4% mark, that's when I think market makers and investors will start to get worried and weary of a rate cut coming soon. We all know that short-term rate cuts aren't good for risk on assets like Bitcoin and the stock market, because it just goes to show that the economy is weakening. There's something wrong with the economy, and investors don't like that, hence why the market does crash over time. If I were to just give you an example, let's say if I just overlay the Bitcoin price just quickly and for reference, you can see that every time the Fed cut rates, if I just leave this here, the market began a significant downtrend. We only have 2 data points for Bitcoin, but within the S&P, if we go to the S&P, we'll be able to see that when you overlay interest rates, whenever there's that first rate cut, oh, what's going on here? If we overlay interest rates right here, what's going on? Okay, there we go. We can see that whenever there's a rate cut it does not spell good for the economy. Yeah, you can see over the course of history, a major rate cut just leads into a significant downtrend, just like here and here, just like here and here. So it does beg the question that when we do get to that point of a rate cut, investors do not like that because they know something's iffy with the economy, and it's likely going to cause a short-term or maybe even a longer-term correction within risk on assets. But anyways, what does leaving the interest rates unchanged mean for cryptocurrency and Bitcoin? Well, if we look at the Bitcoin dominance, I see leaving the rates unchanged, especially within the near-term future. I do believe that because the interest rates are unchanged, the longer the Fed leaves interest rates higher for longer, the longer you'd have to assume that the Bitcoin dominance will keep going up. Why? Because the transition of liquidity from altcoins is making its way back to Bitcoin as investors fear an upcoming recession. Let me repeat that. So, as interest rates are higher for longer, there is a chance that a recession will occur. But by the time the recession does occur, there is a transition of liquidity from higher risk assets into lower risk assets. There's a transition of liquidity from altcoins into Bitcoin. We all know Bitcoin is the king of cryptocurrency, and the liquidity is transitioning from altcoins into Bitcoin because the rates are higher for longer and the Fed is essentially reducing their balance sheet. And when that occurs, you'd have to assume that higher risk assets, the liquidity of those higher risk assets are going into the lower risk assets as we are heading into a risk off environment due to quantitative tightening. Regardless of where the price of Bitcoin goes, because if the price of Bitcoin goes up, you can assume that it will drag the price of altcoins against their USD value. Whether or not the price of Bitcoin goes up or down, that is fine. But as we are in a QT environment, you'd have to assume that the Bitcoin dominance will keep going up as we are heading into a risk-off environment, or we've actually already been in a risk-off environment, to the point where the liquidity of altcoins is transitioning into Bitcoin. That's just my thesis on what this means for Bitcoin and the cryptocurrency market, hence why I'm in a Bitcoin heavy portfolio. I'll say this now, I do believe altcoins will outperform Bitcoin, just like in this run right here in 2020. But that's why there's a lot of similar shouts that this is sort of a 2019 run, because if we overlay this with interest rates, you can see that the 2019 bull market, where we was in a bull market for 6 months, that was also during a period of quantitative tightening. Just like where we are now, we are enduring a period of quantitative tightening. This is also a bull run right here. This is also a bull run right here. The only difference between this bull run and this bull run is that the bull run in 2023-2024 essentially has hit a new all-time high, whereas in 2019 it didn't. The reason why I'd say that we're not closely linked to the bull market in 2020 and 2021 is because that was during a period of quantitative easing, and this period of quantitative easing is when altcoins outperformed Bitcoin. Liquidity from Bitcoin went into altcoins, hence why cryptocurrency, the asset class, and the social risk went up like crazy. By social risk, I mean metrics on YouTube, Twitter, the amount of retails coming back into the market. That is why I do believe we are closely linked to the 2019 bull market now, because the 2019 bull market was also a bull market where the liquidity from altcoins transitioned into Bitcoin, and that is what we're seeing right now. I mean, it's just a fact. Just take a look at the Bitcoin dominance. It's just been heading up ever since September of 2022. So, We also have of the opinion that as this is the Ether Bitcoin pairing, this is why I do have the bias of altcoins continuing to bleed against Bitcoin, because during phases of quantitative tightening, you can see that Ethereum bleeds against this Bitcoin pairing. You can see in this process right here, as Ethereum bled against Bitcoin, the Fed's decision of interest rates went up. You can see that ever since the Fed started to raise rates, it's because interest rates went up. And that is just how it is. You know, it happens in the stock market as well, where liquidity from higher risk stocks like penny stocks, they all transition into the lower risk stocks like the Magnificent Seven, the Fantastic Four, etc. Hence why you hear recently that the top 4 of the stock market make up like 50% of the entire S&P 500. Something crazy like that. Don't quote me on that, but you see things like that where the top 4 of the stock market does make up a majority of shares of the S&P 500. It's just like that within cryptocurrency, guys. Bitcoin is the king. Bitcoin is the least riskiest cryptocurrency asset out there. And liquidity from the higher risk altcoins makes its way back into Bitcoin, as we are in a risk-off environment, as the Fed is reducing the size of their balance sheet and they are leaving rates higher for longer. So that is it from me today, guys. I hope you all enjoyed the video. If you did, smash that thumbs up, smash that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.